Welcome back to the channel, traders. Today, we're diving deep into a fascinating corner of the market, exploring what happens when a stock becomes incredibly hard to borrow, and what that could mean for potential short squeeze dynamics. Our focus today is on BJDX Inc., ticker symbol BJDX, a company in the healthcare and medical devices sector that's been flashing some intriguing signals on our hard-to-borrow screener. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's start with the basics of BJDX Inc. BJDX. This is a microcap company with a market capitalization of just $1.03 million. BJDX operates in the crucial healthcare and medical devices sector, focused on developing its Symphony technology platform. This platform includes an analyzer and single-use protein detection cartridges designed to provide rapid measurements of key diagnostic biomarkers found in blood. In simpler terms, they're working on technology for faster, more efficient medical diagnostics. Looking at recent price action, BJDX has seen some volatility. Today, it's up by 2.46%, but over the last 5 trading days, it's down 6.72% and a significant 42.40% over the last 30 days. Volume-wise, today saw 70,092,000 shares traded, which is a considerable jump, 2.2 times its 30-day average volume of 7,924,763 shares. Show chart, BJDX daily chart with volume. What is cost to borrow and why it matters? To understand why BJDX is on our radar, we first need to grasp the concept of cost to borrow, or CTB. When an investor wants to short a stock, they don't own the shares, they borrow them from a broker, sell them, and hope to buy them back later at a lower price to profit. But borrowing isn't free. The cost to borrow is the annualized interest rate charged on those borrowed shares. A high cost to borrow, especially anything over 100%, tells you that demand to short the stock is very high, and or the supply of shares available to borrow is extremely limited. It's not just a statistic, it's a financial burden on short sellers. The higher the fee, the more expensive it is for them to maintain their short position every single day. This can be a huge motivator for them to cover their shorts, especially if the stock price starts to move against them. Why this stock is hard to borrow right now. Now let's talk about BJDX Inc. specifically. Highlight CTB on screen. BJDX is currently flashing an annualized cost to borrow fee of an astonishing 745.4%. That means short sellers are paying an immense premium just to hold their positions. While the fee itself is astronomically high, our data shows a momentum shift. It's actually come down by 228 percentage points over the last 5 trading days. This doesn't mean the pressure is off, it just means that even after a significant drop, it remains exceptionally expensive to hold a short position in BJDX. Why is it so high? Because shares are incredibly scarce. As of our check, there are only 2,000 shares currently available to borrow for BJDX. Show shares available, 2,000 prominently. Combine that with an estimated float of just 0.9 million shares, and you have a recipe for extremely tight supply. Our internal composite squeeze score, which factors in CTB levels, momentum, borrow supply, float, and technicals, gives BJDX a score of 51.1 out of 100. This score indicates a noteworthy, though not extreme, potential for squeeze conditions based on our algorithm. Squeeze mechanics explained. So, what exactly is a short squeeze? It's a chain reaction. When a stock with high short interest and a high cost to borrow starts to rise in price, short sellers begin to lose money. If their losses get too high, or if their brokers demand more collateral and margin call, they are forced to buy back shares to close their short positions. This buying pressure, in turn, drives the price even higher, forcing more short sellers to cover, creating a self-reinforcing upward spiral. For BJDX, with a 745.4% CTB and a paltry 2,000 shares available to borrow, even a modest upward move could trigger significant covering activity. However, it's crucial to understand that a high cost to borrow does not guarantee a squeeze. Short sellers might have strong conviction in their bearish thesis and are willing to pay those exorbitant fees, betting the stock will eventually fall significantly. Dilution risk check. One critical factor that can make or break a short squeeze thesis is dilution. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This can negatively impact existing shareholders by reducing the value per share and can severely undercut a short squeeze by providing new shares for short sellers to borrow or cover with, thus easing the supply crunch. For BJDX, our recent checks are favorable on this front. We found no recent diluted SEC filings such as SMINUS1, SMINUS3, or 424B in the last 90 days. Furthermore, there's been no recent reverse split found for BJDX in our look-back window, which can sometimes precede or be associated with dilutive activities. This absence of recent dilution reduces one significant headwind that often plagues potential squeeze candidates. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. For BJDX, keep a close eye on a few key metrics. First, continued low shares available to borrow. If that number remains in the hundreds or low thousands, the borrower pressure stays intense. Second, look for sustained upward price momentum and a continued increase in volume, like the 2-point TWX average we saw today. Show volume bars on chart. A surge in price coupled with increased buying pressure is what starts to squeeze the shorts. Also, be aware of any news from BJDX Inc. regarding their medical device platform or clinical developments, as positive news could provide a fundamental catalyst for price appreciation. Lastly, watch for any changes in that CTB fee. A sudden spike upwards again, or a continued, consistent level at these rates, indicate shorts are still paying dearly to hold their positions. BJDX Inc. BJDX presents a fascinating case study in the hard-to-borrow space. With a staggering 745.4% annualized cost to borrow, only 2,000 shares available, and no recent dilution, it certainly fits the profile of a stock with significant short-term friction. However, remember the balance: high cost to borrow does not guarantee a squeeze, and short sellers may have strong reasons for their positions. It's a high-risk, high-reward area of the market that demands thorough research. What do you think about BJDX? Let us know in the comments below. If you found this analysis helpful, please hit that like button, subscribe for more educational content like this, and ring the notification bell so you don't miss our next video. Until next time, stay safe and trade smart.